Noah,
Oh,
we went
hey,
live.
here we go. Press the button.
And we are live here on our YouTube channel, Tackle Trading's Halftime Report. We've got Matt and myself, Tim, here, and Noah Davidson from Tackle Trading, one of our coaches over there. Cody on the back end producing. Let's start with Matt. How you doing today, brother?
Doing really good, Tim. Excited to be here with the halftime crew to break down all the news of the day and see from not only just the news, but obviously the technical conditions we're seeing in the market right now.
Yeah. And Noah, how are you holding in up there, bud?
Oh, all things considered, I'm awesome. Thrilled to be alive, happy to be here, and just with the people I care about and the community that we care so much about. It's just an awesome time to be able to come together like this.
I think so as well. The thing about community, I was in the lounge this morning, and if you're a Team Tackle member of our pro community, you probably were in there with me this morning. It's just great to see the same names and voices and questions and the conversation coming together. There's a lot of people out there that are doing great, quite frankly. There's a lot of people out there that are still trying to figure all this stuff out. Matt, I'm one of them. I don't know how the market's going to find a bottom in the short term. We'll be talking about it. But the one thing I will just tell everybody out there, community is the reason why we exist here at Tackle Trading, which is not just giving me a sense of pride here this morning. There's no question about it. Let's start with the S&P 500 here, guys. There's a lot of news going on today. Let's break this down technically first. I did a deep dive on multiple time frame analysis in a stock report over the weekend, Noah.
Which was awesome, by the way. I went through that and I was thoroughly impressed. Good reports.
Very good, man. Can you take a look at like the monthly, the weekly, and the daily chart, and then into the intraday and kind of give us a full breakdown of the technicals?
Yeah, you bet. Let me back my weekly chart out to a monthly chart and just go big picture. And this is really important for context, like just understanding what you're looking at. So if we go look at the 20-year on monthly time frame, again, pretty heavy sell off in the picture of things. You got a big old fat support resistance zone here at the 2100 zone. And I think 2000 is a big psychological barrier and some support even below that at 1800. And so again, pretty steep sell off for a 1 month sell off. That's record breaking, speed, and a lot of downward momentum into that. But there are some support zones down here in technical zones that people will be looking to.
Yeah. If you draw the upper channel trend line and the lower channel trend line, Noah, you have one of those kind of megaphone patterns developing here on the long-term chart. I don't know what that necessarily means, but I think what it really means to me is the increasing volatility we have in the markets we're in.
When it's a megaphone, it means watch out. Things are getting crazy. That's what a megaphone does, right?
That's right. The increasing volatility seems to be here to stay, Matt. From these long-term perspectives, one of the questions I've been getting recently is how to day trade, right? I've been getting the question of what stock should I be looking at if and when the market does settle in, how to play the bear flags. I get a lot of questions, but here's another one I get. Where's the bottom? Matt, based on technicals, where could even some conceptual bottoms be in here?
Well, I think Noah nailed it on the head when he's talked about this significant whole number at 2000. You got major support there between 2100 and 2000. And, this market has really kind of, found support on those whole numbers, 2100, 2200, 2500, so on and so forth. So I'd be looking at some degree of slowing momentum, perhaps as we start getting into that 2000 to 2100 level. But that may not be the bottom. If you break that out from a longer term perspective, that 1500 zone in the market is very significant. And I'm not calling that we'll test that in the short term, but that could be where we do establish a bottom in the market. That was the kind of the top range of the S&P 500 during the subprime market. It was also the top range of the market when you're talking about the top of the .com market as well. So a retest of those very significant price levels at 1500 could happen over the next month or so. But I'm first looking kind of where Noah was looking at, that 2000 level. And then if you ever do break 2000, there's really nothing underneath that until you get to 1500.
Yeah, there's no question about it. And some of those numbers are pretty startling. There's no question, guys. But we've come from 3,400 down to 2232, and the market pressures just continues. There's no doubt about it. Monthly candlestick charts. I love the big 20, 30-year charts for big picture analysis. Now go down to the weekly if you can here, Noah, on the S&P. We're on the futures contract here. There's a lot of ways to look at the S&P 500. I like that futures chart, always very clean, very, very good to read. You'll notice that megaphone pattern, and we have violated the moving averages, the support, same location. I think the next hopeful stopping point, if you were long, would be that 2000 mark, don't you think? I mean, the weekly chart doesn't show me anything good here, though, Noah.
No, I mean, there's some minor support zones in here, like 2,800 where it's sitting right now. You can see if, let me bring in a little history. There's an old minor pivot point back here at that 2,200 ballpark. And then below that, you've got that 2,100 zone we were talking about. And then 2,000 is just a big round number. And the market almost always seems to respect those big fat numbers that ends in, big zeros and fives and things of that nature. So, 2,000 is, I think, is a just big psychological barrier for the market. And the market is slowing down a bit, just looking at these candles. Now, of course, this candle here, this weekly candle is just starting, but, pretty big candle. The candle's, shrunk a little bit and then it's shrinking. And then again, ranges on this are still pretty big, but you are seeing a slowdown.
Mm-hmm. And then the least helpful candlestick chart, in my opinion, in the short term has been the daily candlestick chart. Break that down. Matt, why are dailies so tough to read right now? I mean, there's nothing from a technical perspective that you're going to get a signal on here.
Daily candles are really, really tough to read because we have the news cycle on a 24-hour cycle is so fascinating. I mean, we go from limit down last night because the fiscal stimulus didn't get it passed on their first deadline to absolute just rip roar about 8 o'clock Eastern Standard Time when the Fed did what they did, and we can talk about that when you're ready to talk about it, Tim. And then it starts selling off very, very aggressively when it came out during the cash open that the Democrats and the Republicans were not close to an agreement. And then just an hour ago, Mnuchin as well as Senator Schumer, Chuck Schumer said that the bill is close to being passed. So, just given the fact that what was seen over the last 12 hours in the market have seen some major, major, major news cycles, that's just something we've been seeing for the last 2 weeks in this market. And that's something we're going to be seeing in this market until we start to see a path to where the economy can start to recover, a path to when the corona situation starts to dissipate from the consumer and from society's mind. So it's just very, very difficult. And that's why swing trading has been so difficult in this environment. And that's why we haven't put any swing trades into our scouting reports. We've been really just kind of creating watch lists because swing trading from a daily perspective is is really difficult. That's why day trading is much more popular right now in comparison to swing trading.
Yeah. And go down to the intraday chart because I do want to talk about that right now here, Matt. And really to understand the nature of the market volatility right now, you have to be watching an intraday candlesticks, whether it's on the hourly chart, the 30-minute chart, the 15-minute chart. One of those timeframes I think helps a lot better. From Friday until now, we saw the market go limit down when the futures market opened on Sunday afternoon. Okay. And a lot of that was just on this overall market pressure that we've had. There's three big questions, in my opinion, that traders and investors are trying to process. How fast is the virus spreading and how good is the containment effort? How effective has quarantine been in the data? That's number one. Can businesses get enough capital through the Federal Reserve, through these treasury programs, through whatever it is, to get through any liquidity crunches that we're in? That's number two. And then number three is this fiscal stimulus, Matt. What impact is it going to have? Let's start number one, Matt, with the actual fiscal stimulus. What is happening there? Because I know there's a lot of chatter back and forth between Democrats, Republicans. They're trying to get something done. What do we know?
Well, what we know right now is the current bill. When the Republican senators put out their bill on Friday, we knew it was about a $1 trillion bill with $300 billion in basically quote unquote loans to small businesses, another $200 billion in bailout money, and then some direct cash injections to the consumer base. That had some limitations on how much money you make based on your tax return of 2018. So that was the first bill, and then obviously went to the Democrats who control Congress, and they come in and they try to put what they want into them. And right now, Tim, they're just trying to find a some common ground on what the final bill is going to look like. But the holdup has been the percentage of the support for people versus corporations. Obviously, the Republican plan had more money going into corporations with bailouts and short-term loans and so on and so forth. Democrats want a higher percentage coming into directly into people's wallets, so to speak, so that they can start to, so that they can, hold off, pay some of their bills, start the spending processes again. And then obviously with any situation like this, we saw it in 2008 and 2009 when the bailouts happened last time. You're going to find a lot of pork in those bills, and certain Congress people, certain senators, they're going to put some of their things that their passion projects, so to speak. For example, one of them is, I believe unions have a much higher ability to negotiate contracts than what they currently have. That's just one example of it. I fully expect this bill to come together and pass later on today. And what the final bill looks like, we don't know as of right now. But it's going to be between 1.8 trillion and $2 trillion in fiscal stimulus. If it's underneath that, the market's not going to. It's just the market will sell that news. But if we're coming in between 1.8 and $2 trillion in fiscal stimulus, it's going to be interesting to see where all of the percentage of that money is going. And that's why, the question, if the stimulus bill passes, what sector stocks will see some upward movements in price. The entire market could rip roar here, based on the passage of the fiscal stimulus. But I just want to remind everybody that the passage of fiscal stimulus does not necessarily mean this situation is over. This is a medical situation, and we need to start seeing data from a medical perspective. And like I said, a path to the economy coming back, a path to people going back to work, a path for corporations to go out there and start doing what they do as well. So I still see this as the beginning of something, not the ending of something. And if you just look at kind of what happened here today, you can kind of understand why my opinion is where it is. Even if the fiscal stimulus does happen, it doesn't mean this is over. Guys, at 8 o'clock this morning, the Fed went ballistic. I mean, just full on ballistic. Here's what the Fed announced this morning, guys. They have unlimited funds. We all knew that, but they've never said it. But they have unlimited funds. That's number one. Number two, mortgage-backed. They are willing to purchase any amount of mortgage-backed securities, and they're going to do anything they can to ensure that those mortgage-backed securities don't go under the same way they did in 2007 through 2010. Number three, they lifted the quantitative easing cap. That's number three. There's no cap to their $750 billion quantitative easing program. They also announced for the first time ever they're going to start directly purchasing corporate bonds, and they're also going to establish a Main Street business lending program as well. Guys, I as a student of the Fed, I've never seen the Fed do something as radical as that, and this is on the backs of 2 straight weeks of emergency rate cuts down to zero interest rate policy. And how long did that last in the market, guys? That lasted an hour before it gave everything right back. And so, yes, you could see a short-term, price appreciation in the entire marketplace, depending on what this final bill comes out at. But until we see a path to workers coming back to work, the economy recovering, and getting back to life as we know it, there's going to be volatility in this market.
Yeah. Noah, number one, do you think that they're going to get something done here in the next day or two? Do you expect that?
Yeah, I think so. I think the urgency is there, and they seem to be coming together. And I think they're just, bickering a little bit over the details. But I think they'll get something worked out. I think we'll see some help to Main Street folks will get some cash relief, and then I think it'll be interesting to see which sectors and which businesses get the influx of stimulus. And the question came up in the chat, who's going to benefit from the stimulus? Well, I think that's kind of a question we're all waiting to see. So there'll be, I think if they do a big enough stimulus, you'll see a short-term rally.
And here's the thing about the whole debate, Matt, right now. And let me get this point out. I just don't understand what the rush is. I mean, why can't they take a day to make it the most important fiscal stimulus that has ever been proposed actually what they want? Are we that in
the rush is because even the World Health Organization today came out and said the situation is increasing the velocity. And what they were talking about in that capacity was it took 67 days to get to the first 100,000 confirmed cases. It took 11 days to get to the next 100,000 confirmed cases. It took 4 days to get to the next 100,000 cases. And it's taken 2 days to get to 350,000 total confirmed cases with about 15,000 deaths so far. The situation, the velocity of that situation is very, very concerning. But I also think there is a very, very vocal minority on social media that is influencing this as well. And you're starting to see a certain demographic in our society basically hold the belief that we should take on the risk to the corona situation. We should take on the risk to having millions of people die so that we can go back to work and we can get our economy back up and running. Even heard the president say it today. The cure cannot be worse than the disease. And although I do understand that philosophy to a certain extent, that is what's driving a lot of this. We need to act immediately. I mean, Tim, the Fed came out today with just an absolute, just went ballistic on what they're doing. So there is a growing concern in the consumer base with corporations, Wall Street, and obviously at the government level. And so they're looking to get something out there as fast as they can. Now, you know, how quickly it came together, they've probably been negotiating this for a couple of weeks, Tim. This is just kind of the final, dotting the I's and crossing the T's and making sure everybody's, comfortable with the plan. But it has been truly amazing in the last 2 to 3 weeks to see how we went from, $8 billion in fiscal stimulus was the initial plan to $50 billion was the next plan. And now we're talking about $1.8 trillion to $2 trillion in fiscal stimulus. The Fed goes from an emergency 0.5% cut to zero interest rate environment to an expansion of quantitative easing to now just 2 weeks after all of that, like we will do whatever it takes type mentality. And I just maintain one simple philosophy, Tim, that there is something that governments are seeing in the data that we don't understand. And that's what's leading a lot of this. We have to act immediately. I don't believe this is the ending of fiscal stimulus, by the way. I think you'll see more fiscal stimulus come down the road. Maybe it's through infrastructure deals or so on and so forth. But yeah, this is not the end. We're going to see more fiscal stimulus. We're going to see more Fed action. And that's why everybody should own gold.
Well, and if you really follow the dominoes falling around the world, the way that things have happened over time, I mean, we're seeing more stark measures taken in France and Germany and Italy. This idea that in the US, that after 15 days, we're going to end the quarantine and all go back to business. I mean, that just seems like complete fantasy. It just seems like a complete fantasy. I just do not expect that at all. That would be ignoring what we've seen in every country around the world in the way that this virus spreads, Matt, which is going back to the medical issue of the whole situation. Fiscal stimulus, the market wants it, but guys, are you even confident that if it gets passed, the market's going to find a bottom?
No.
We don't know that $2 trillion, which is crazy to think about, is enough to stop the problem here from an economics perspective, Matt, because even Fed Chair Bullard came out and said that in the short term, and this is like a Q2 kind of situation, that you might see just spiking unemployment and a big drawdown in GDP. Economists don't know how to wrap their head around it. So I don't know if we should start calling for a bottom on this kind of stuff.
No, I mean, I haven't agreed with what Bullard has said in the last 12 years, not one time. But he did say today that the unemployment could reach as high as 30%. That would be greater than the Great Depression, number one. And he said GDP could contract by up to 50%. Now, I don't believe that in the short term. We'll have to see it in the data, but they're putting all that data out there just to justify their financial, their monetary policy.
Oh my, well, a lot going on obviously here. The market's trying to find a little relief rally on the intraday. You've got some,
by the way, very quickly, consumers on Twitter and society in general will debate what the fiscal stimulus plan is. They'll either criticize it or not criticize it. They'll support it or criticize it, all that jazz. What the Fed is doing is in my estimation, far more damaging to the buying power of the United States dollar than a $2 trillion fiscal stimulus program.
Yeah, it's hard to even wrap my head around it, Matt, knowing what their history is and what they're proposing to do and what they're willing to do as they move forward. They will not go to any length, or they will not stop at any length to try to provide liquidity to the market right now, don't you think? mean, they've shown
Yeah.
that they're willing to do that. Yeah. S&P 500 in free fall here over the last month, trying to find a little green candle here on a Monday morning. Fiscal stimulus, the Fed, a lot of the same chatter that we've been having. Let's break down some of the other markets here, Noah. Move on to crude oil if you can. Let's talk a little bit about what's going on in the energy space. Obviously, crude is a very important reflection of global economics. Noah, break that down technically if you can.
Well, again, we got a big gap down off of the news of the price war between the Saudis and Russians, and everybody gets caught in the crosshairs there. We're seeing it continue to decline, and so far it's holding that $20 level. We stayed above 20.52 at the low, but today we have a small little doji candlestick, and again, that low could break. You could see a rally in here, but I suspect we're going to see more down out of crude before we see an up. But at some point in time, I think crude does become a buy. The question is when, and that's just one of those things you kind of watch and be careful. And I'm okay missing it if it's a V-shaped recovery. I'll watch closely for better signals.
So much of this is going to be news driven, Matt. It's hard to kind of try to come in and do something with crude outside of day trading, because what MBS decides, what Saudi Arabia decides, and what Putin decides, we don't know if and when they're going to start having a conversation in a positive way. But even that being said, it has real demand issues with the whole economic situation. Crude very bearish here, Matt. Anything to add?
No, I'm not looking at being a buyer at 20, maybe 15, but it really depends on what the economic situation is. There was some hope that U.S. shale companies would start to do kind of some, business with the OPEC countries, kind of like Russia does with the OPEC countries. But those deals are quickly fading away. There's going to be a real demand issue here on crude oil. And with Saudi Arabia digging in, I read some interesting data over the weekend that Saudi Arabia, and this was put out there by the Wall Street Journal, Saudi Arabia feels like they can survive a very prolonged war on crude oil because of where they need their price thresholds to make money versus where Russia and the US needs their price thresholds. And what the data was, is it suggested that Saudi Arabia needs crude above $8 for them to maintain their production levels. The US shale companies need it right around $22, and Russian shale companies need it right around $20. So, that's right where you're at right now with where crude is, to where, US shale companies, Russian shale companies might have to start shutting down a little business, which would obviously impact the value of crude as well. So I think this is something we got to dig in for the long haul, but I do believe there's going to be a really good opportunity somewhere in that $15 range, but we'll look at the technical situation when it gets there.
Yeah. Gold next.
By the way, it's shortable under 20, by the way.
I still think there's an entry, and the discussion around 15, we'll have it when it gets to 15. That's kind of where my head is as well. There's still that interesting thesis about negative crude prices potentially, Matt, which I'm still trying.
I don't buy that.
Oh, I'd love to get them pay me to take some oil. I'd store some barrels right there in my garage.
Yeah.
Like everybody go dig a hole and start putting oil in it. That's going to happen.
Gold is making a rally here today in the short term. The thesis around gold, the fundamental approach to gold has not been ever stronger, in my opinion, Matt. You've laid that out many, many, many times. Short-term volatility doesn't really grab our attention too much, but nice candle on gold here today, finding and holding that 200 period moving average. Noah, what are you seeing from a technical perspective here? Is there anything in the chart?
Yeah, absolutely. One, there's that 200 period moving average here on the daily chart that it tested and even kind of broke below it, but it's rallied back up above that. I see an actual double bottom here. You don't necessarily see it on the candlesticks that well, but if you drop that down intraday, you can see where it tested here on these candles to the left, got a little rally and then dropped again, held that same 1460 ballpark price zone. And we've seen the rally off that. So again, you back that down you drop that down into the intraday time frame. And, there's 30-minute chart there. You can see it's actually double, triple bottom, where it held that zone. You're actually starting to see it break to a new highs on that 30-minute time frame. And so we have a full blown, intraday reversal on that. And then you back it out to the weekly chart, and it looks like a nice little bullish retracement into a rising, 20-week and 50-week moving average, big support zone bounce there. And I think a lot of the selling pressure you saw is as we've discussed in the past, some liquidation for margin calls and things of that nature, people looking to get their hands on some liquidity, dumping their profitable positions to, go throw money at their other stuff. And, little inside candle here on the weekly chart, that's a bullish Harami style candlestick, definitely a big one in that regard. So I think, technically speaking, it backs up what we've been talking about from a technical perspective, that backs up our fundamentals at this point.
Matt, let's say that you had a good portfolio hedge in gold. You've got a good core position. Is there a case to add to that at this point?
Yeah, the Fed's lost their mind, and we're going to see $2 trillion fiscal stimulus, guys. I mean, I've maintained one simple philosophy in this entire situation from really, I mean, it goes back to when I wrote a commodity report for Tackle back 2 years ago saying this is the time to start owning gold. And every moment since that time frame, especially from September of last year on, the fundamental case for gold has never been stronger than it is today. And so I could care less what happens on a daily chart. I can care less what happens on any time frame on any chart in regards to gold. And the reason is very, very simply this, guys. The Fed and what the actions the Fed is taking with the fiscal stimulus that we're seeing, you are truly making a risk to the buying power of the United States dollar. And and from September of last year, when they started increasing their balance sheet to today, at no point in the history of the central bank that dates back to 1913 have we seen an increase in the balance sheet as fast as what we've seen over the course of the last 6 months. And with what the Fed did today, announcing that, we will this whatever it takes moment from Jay Powell, saying that we have unlimited funds to buy any amount of mortgage-backed securities, to do any amount of quantitative easing, to any amount of corporate purchasing of their bonds. That to me is going just full nuclear when it comes to what the Fed is doing. And in that environment, when people are concerned about, man, the amount of money that's coming into our economic system to the tune of trillions upon trillions upon trillions of dollars, there has never in the history of mankind been a better argument to own gold long term.
Yeah. Give me the euro dollar cross pair if we can, as we talk about the currency markets.
Now, hold on. Hero asks a very, very important question. Hero says, can they keep the price of gold down? Yes, there are certain things that it's not the government and it's not the Fed, but there are certain things Wall Street can do through the exchanges to really kind of limit the price of gold. And if you'll look at a long-term chart on gold, let's go back to 2008 through 2011. If you look at what happened to the historic run that gold had after we were coming out of the subprime market crisis, and it went from $800 all the way up to $1,900, as gold was going up so fast, so quickly, there was an agreement that was made between J.P. Morgan through Jamie Dimon and the Chicago Mercantile Exchange to basically increase margin requirements on gold positions, and that put a top in the gold market. And it's the same thing they did back in 1981. When gold was going through its historic run from 1978 to 1981, and gold went from like $60 an ounce all the way up to $660 an ounce, and they did the same thing then. They raised margin requirements on what you could hold in the futures market. So there are scenarios that can play to keep the value of gold down, and that's through the margin requirements. And Hero, if we do start seeing that, obviously we're going to let the community know. But that does not change my thesis that based on the fundamental, the economic, monetary, and fiscal policy, that all of these kind of just are the stars aligning to a certain extent, and gold ownership is absolutely needed, in my opinion.
Yeah, yeah.
And by the way, I'm not just talking about the paper asset.
Mm-hmm. Yeah, I'm with you. I'm with you 100%. Give me a look at the dollar here or the euro dollar cross pair, either one. I'm finding some of the information coming out of Euromat to be very startling, very concerning, obviously. The dollar continues to rally even on the backs of all of this Fed stimulus and this monetary creation of just whatever liquidity they need to do and throw it at the problem. Dollar strength, though, is much more a reflection of overall currency weakness outside of the US and a rush to the safe haven. A couple of things. Number one, Europe is looking for a European bond that would have everybody take ownership of it and the risk and the liability of it. The last time they had a Eurozone crisis, Germany rejected that, Matt. They did not want to be a part of obligations in Spain or Italy or other countries, right?
It was Greece, Spain, Italy, Portugal. It was the pigs.
Yeah. They may get this done this time, though, because it is a very, very real situation in Italy. The cases in Spain spiked over the weekend. In Italy, 8% of the cases are from the medical staff, and that continues to be the worst hit area. And by the way, Chancellor Merkel is actually under quarantine right now because she came into contact with somebody who did have coronavirus.
Yeah, a doctor. There was a doctor that she came in contact with, and she's under quarantine right now.
How do we make sense of these currency markets? I mean, I'm trying to wrap my head around it, Matt, and I'll get Cody in here in a second.
Yeah, obviously there's been a rush into the dollar from around the world. It's the safe haven asset the dollar represents against the other currencies. Now, what you're seeing in the price appreciation of the dollar's going up in response to other currencies going down. Obviously, there's been a demand around the world for dollars. Tim, I'm concerned about the Eurozone. I'm concerned about the emerging market currencies. And if we're concerned about the emerging market currencies, and I'm talking about concern from a fundamental value perspective, and if we're concerned about what the Eurozone is going to look like 5 to 10 years from now, given the wave of nationalist type movements that we were already seeing before this Corona situation took hold, obviously there's going to be a demand for the dollar. And what's happening here, if you break this down from an intraday perspective, and then I can bring in Cody here for a second, but give me a 30-minute chart on the dollar. What you're seeing is an intraday resistance level that is starting to form on the dollar that we should be aware of. And if you'll draw a line right there at that 103 handle, Noah, if you see a breakout of that 103 handle on the dollar, that could be a really, really good short-term trading opportunity, in my opinion, because not only is it intraday at 103, the all-time high of the dollar over the course of the last, not the all-time, but the last 10 years is about 103.82. And if you'll back that into a monthly time frame, Noah, as well on the dollar.
There we go.
Okay. If you break out of the 103 and break out of that 103.80 level on the dollar index, there's really nothing until you get to about 110. And if that's the case on the dollar, coming back here to the euro, if the dollar's at 110, you should see the euro dollar US dollar cross pair probably coming down into pairing, and that's another 700 pips lower than it is today. So keep an eye on that 103 index number. If we do break out of that, you could have some short-term opportunity on buying the dollar against some of the other currencies. Cody, you did the Forex report over the weekend, correct?
Yep, I did the Forex report. And
what's your take on all this?
Very similar to yours, and I did actually talk about how historically one of the reasons that we're seeing money flow into the dollar right now is this is a global issue, is historically the United States economy has been able to actually gain in strength a little bit faster than any other country has. And that goes back to World War II, and that's one of the reasons that 3-4 weeks ago we were seeing money flow into things like Japanese yen and Swiss franc. Both of those took it on the chin this past week or two, whereas the money's coming out of those currencies and moving to the US dollar. So I'm seeing this just as a fundamental shift of people saying, okay, of all the currencies, which one's the least ugly? And we've said it time and time again that the US dollar is the least ugly of the currencies. And that's why I think you're seeing a large appreciation in the US dollar right now. And the biggest thing I told everyone was, wait, be patient, wait for that setup, wait for that break, wait for a pullback, whether it's a good pullback, a flag, or a base. And then, that break of 103 would be beautiful. So a lot of what you covered is kind of what I talked about in the Forex report.
Yeah, and you could certainly see it fade, maybe kind of do a little bit of a bullish retracement, maybe just a high base type scenario. But what's absolutely amazing today, guys, is to not see any selling in the dollar today. I know we're down 46 cents on the dollar, 0.45% on that dollar, but to see what the Fed did this morning, to see what the government is doing from a fiscal stimulus perspective, seeing the increase in the liquidity of the dollar by the tune of what will be trillions and trillions of dollars, and the dollar just holds up. That was fascinating. That shows you the strength of the currency right now.
Yeah. Well, even if we don't necessarily trust the Fed to the fullest extent, which central bank do you trust more or distrust least?
Oh. Which one do I trust?
I know that's a hard conversation, but
first of all, I think they're all in this together through the Bank of International Settlement. So
Can I say the People's Bank of China, maybe, since I don't trust any information coming out of China right now. The idea that they've been able to contain the coronavirus in the last month, there's no new cases, Matt. I mean, come on. I don't believe
nonsense.
That. No, nonsense. I agree. Let's talk individual companies here. There's quite a few in the news that I want to get down to. Number one, let's start with GM, Ford, and Tesla. You can bring up any of those stocks right now. Matt, interesting news out of the automakers here. Break it down for us.
We were starting to see a little bit of this chatter last week and Elon stated on Twitter as well, talking about how, we need more ventilators. We need a ton more ventilators. And he said on Twitter last week that he could start producing ventilators, but they had to reestablish the National Defense Act, which they did over the weekend. And so now Ford, GM, and Tesla have now gotten the green light to make ventilators and other metal products out of their factories. A very, very good decision by the government. And also, kudos to Ford, GM, and Tesla for turning their technology and their factories to start helping a national healthcare crisis. You got to give all three of those companies some prop, no doubt.
I love stories like that. There's no question about it. Boeing is the next one I want to bring up here, actually. Boeing, actually some interesting news, Matt. They suspended their dividend and they paused share buyback programs, probably as a white flag to the government looking for a bailout, saying, hey, guys, we're not going to buy back our stock and all that kind of stuff. I also saw just coming over the wire, Boeing shut their factories down in the Seattle area. So they're going to be closing down shop as well. What's your read on Boeing's decision to stop their buyback program?
Obviously, that was a waving of the white flag to get $60 billion in bailout money. You probably are going to see companies that do get bailout money through this fiscal stimulus that's going to come out today. You probably are going to see some degree of they cannot buy back their own stock. And I am a staunch opponent of any company getting bailed out that has spent as much money as they have, such as Boeing, Delta, American, United, when they've spent billions upon billions and billions of dollars in stock buyback programs instead of establishing, fundamentally sound companies. But my opinion, notwithstanding, that's the U.S. Congress is not calling me. President Trump is not calling me, and Boeing's going to get their bailout money. What's interesting though is guys, Boeing is down about 440 to 450 to 100 over the last year or so. Right.
Yep.
At what point do you see Boeing as a buying opportunity, given the fact that if there's one thing we know, guys, the U.S. government is not going to allow Boeing to declare bankruptcy. They're just never going to do it. It will never happen in our lifetimes. They have way too many contracts and produce way too many goods for the United States military. So at what point would you consider, buying Boeing?
I don't know if a number.
Remove the emotion because obviously we don't like this company. But let's just say we didn't have the opinion we did about the unethical and immoral behavior of Boeing over the last 5 years. So if it wasn't that, at what point would you say, okay, I'm going to take the risk in Boeing? I mean, you are seeing tremendous slowing momentum at $100. It's got a significant whole number. If you break out of that level, it's going to be a short-term trading opportunity, in my opinion. And Boeing is going to get $60 billion in bailout money.
What did AIG do after the bailout? Did they instantly bottom? I'm trying to remember and use a historical case study to compare it. It's a hard question, Matt, quite frankly, because I'm not sure.
Very hard.
Yeah, it's a really difficult question because, first of all, I don't know what the terms of the bailout are going to be, what kind of stipulations they are. There's a growing anti-corporate sentiment. If money does get bridged to Boeing, maybe it's that, hey, listen, you have to pay this back, and it's not just a handout. I don't know. That's tough. I mean, down here at $100, it's obviously interesting. I would make the argument that Boeing, if you hadn't spent all that money on stock buybacks over the years, you should be buying back your own company right now. You would think that.
No, this is the time you should do that, right? Yeah. This is why, we've been so anti buybacks for the last 5 years, is because you wait to announce those things. You don't start buying back your own stock at the top of the market cycle. You start buying your own stock as market starts crashing. And so it's just the greed of Boeing and the greed of these companies that wanted to continue to see executives get, millions and millions and millions of dollars in nice little bonuses because their stock price is going up so much. This is the time you start buying back your own stock after a market crisis, but Boeing's not going to be allowed to do that. What it would take, I don't know. I would have to see a lot more than just slowing momentum over the last 4 candles.
Noah, what about you? Is there a price?
Oh, I think I really like the question in the chat. What's the book value of Boeing? That would be a good thing to know. And what book value is if they had a fire sale on all their assets, what are their actual, physical holdings worth, like their real estate holdings?
Book value per share is about $64.
So yeah, I like $64 a share. That's a pretty good value, right?
Is that though? I mean, here's the problem with book value analysis right now. Is that based on real estate prices where they were 2 months ago?
Probably.
and the
Probably.
assumed value of where assets were. So, I mean, if you have an economic turndown, all of those other assets are going to lose value as well. So I think book value in the short term can be very misleading.
Oh, Tim, I read a nasty report about commercial real estate and how it is just shut down.
Mm-hmm. $64 though. I think at least there's an argument there, Adam, at the book value per share at $64 a share.
Yeah,
I mean,
and that's a fundamental Warren Buffett type argument as well, as that because companies will trade under their book value, correct?
yeah. Oh yeah, they can for sure.
Okay. And when they do trade under the book value, that's what's like, oh, you got a really good value at that point. So that's about $64 on Boeing, but that is based on current real estate value, and Boeing obviously has a lot of it.
It's a tough question, Matt. $50 maybe. I mean, I'm interested, which is where, by the way, if you can ever come up with a thesis and a premise on where you'd be willing to buy some of these really beaten down assets, this is where the boomerang strategy, Matt, actually might be the way to approach some of them. Start selling naked puts at where you'd be willing to take delivery. Even on Boeing, the May 53-day options, if I look at the 50 strike, you can get $5 premium on the thing.
Yeah.
So you can get paid to take on that risk. I'm not willing to do it on Boeing in the short term. It's way too early for me, Matt. There's still too much in the news that we don't know, too much about this bailout we don't know, and too much about the market we don't know. So
we got to see exactly what's in that stimulus program and what are the regulations of companies taking bailout money. We got to see those things.
Next one I want to talk about here are all the upgrades and downgrades. Matt, you had quite a few that got upgraded, downgraded. Run us through that list real quick if you can.
Upgrades. Speaking of which, Boeing was upgraded here today. Lulu, let's take a quick look at Lulu here. Lulu was also upgraded today. Southwest, LUV here. Southwest trying to find support at right there at about $30. They were also upgraded today. Quite frankly, I personally don't understand the Boeing, Lulu, and Southwest upgrades. I understand the logic behind it, but I don't agree with it. A couple I do is Dollar General. Dollar General got DG there, got a nice little upgrade here today. And that's on a lot of Wall Street's pick list just because of cheap consumer type prices. Netflix also got an upgrade here today, which is completely understandable given the fact that every single one of us are streaming record numbers on Netflix.
Which, by the way, have you guys seen Tiger King on there yet?
I was gonna look into that one. Is it good?
Well, it's entertainment for sure. Like that is for sure. It's about these people who own big cats, like all across America, and it's just fascinating. It's like human nature at its finest. It's a good watch if you're shut in and you need something to take your mind off of stuff. That one's good.
We all need more of that right now. Also, Pepsi and Coca-Cola both got upgrades here today as well. Very quickly, a couple downgrades across the board. Two downgrades that were very important. Starbucks, which is understandable given the fact that people are not buying Starbucks coffee right now.
I made the joke.
And they're shutting down their stores too, right?
Yeah, I made the joke in the stock report. A lot of people are going to get to know the taste of Folgers real quick, because who's going to a Starbucks in the short term? You're going to be making coffee at home. There's no.
Which helps Walmart, which helps Folgers, absolutely. Yeah. I've said a long time, coffee is recession-proof, just not Starbucks coffee. Also, AT&T got a nice little downgrade here today as well, and obviously AT&T is kind of taking it on the chin. Tackle 25 stock, Newmont Mining and NEM removed their 2020 guidance as well, which we've seen that a lot of companies do remove 2020 guidance. And quite frankly, I completely understand any company removing their guidance right now because literally, guys, can you tell me what we're talking about and whether it's good, bad, or ugly a week from now?
No.
Okay, then how can a company understand where they are 6 months from now? Which means I completely understand. And a lot of these projections that we're seeing out of the banks with GDP contracting 12%, 24%, Bullard, sees GDP contracting, 50%, millions upon millions, the unemployment reports, all of this is just guesswork at this point. 100% guesswork at this point. You got to be here on a daily basis to make sure to navigate this on a daily basis because we simply do not know what the market is focused on. And I think the most important thing that we can do here today, and obviously in the halftime report tomorrow, is really break down that fiscal stimulus program. Where's the money going? What are the regulations? What percentage of 1.8 trillion is going to consumers versus to corporations and bailouts? And just, you know what, we tried the bailout, in 08, 09, we gift wrapped trillions of dollars in to corporations. I would be surprised if a vast majority of that money goes to corporations. I think you're going to see quite a bit of it go directly into consumers.
Yeah, that whole stimulus deal is going to be a very interesting one. Watching for the market reaction. Obviously, intraday charts and intraday volatility is very important to learn right now. A lot of really interesting companies there, Matt. I'm going to throw a couple in myself. From our watch list, Noah, that you started last week in your stock report, I added a couple in there to add to your, potential coronavirus watch list stocks. Netflix was on there, but Zoom, guys, Zoom's up 25% today. I mean, and it just makes sense, obviously. People are home. Matt, I think our kids are using Zoom for their online school.
They're doing online school with Zoom right now.
And I think a lot of schools, a lot of people, the whole situation has forced people into online and at-home situations. This company was there to fulfill a need. Talk about capitalism at its finest, quite frankly. I love this storyline. Beautiful breakout, beautiful running stock. Another one, Activision up.
Hold on, I wanted to see fake Zoom.
Fake Zoom's down 30%. So
it shot up to $60. Holy cow!
Somebody ticked 60.
Whoops, wrong symbol.
Who ticked 60? That's weird. Wow.
Ooh.
Somebody's not happy.
If you ever want to see the intelligence of the American consumer base, all you have to do is look at Zoom.
So funny. Activision, Matt, online gaming has also exploded, up 8.5% here today, trying to find the 200 period moving average. Still in a long-term healthy trend. There's no question about it. EA Sports, EA, same thing. Whether you're a computer gamer or a console gamer, a lot of people who are at home are playing more of those video games. No doubt about it. EA up 10%, trying to get a little bit of a rip here. And one quick one here as well, even DocuSign, DOCU, who we talked about. If you're going to go home and have to do a lot of business, Matt, DOCU, potential flag they're developing. There are some interesting ideas. Noah, some of these stocks on this list, are you thinking about a more longer term, after we get more clarity? Are you actually going to take a trade at some point? When are you going to take some of these as swing trades?
Well, I think it's, actually swing trades, position trades, controlled management. For what I've done on a handful of these things, like, call debits and things of that nature. I did some back ratios and things of that nature as well. But, I once heard a statement, you don't build a church for Easter Sunday. And I think once this, coronavirus does blow over and we get back to more business as usual, those companies will probably give back some of the gains. But in the meantime, I think that the energy and the surge is certainly something that's actionable.
Mm-hmm. Yeah, no question about it. And then the other thing that we've been seeing, Matt, a lot is that sell the rip mentality. You're going to see a lot of bearish retracements. And if you're out there and you're a pro member of our community, you already know how to play the bear retracement most likely. If you're looking for some instruction on how to do it, Module 5 in the STEP course actually teaches the bear retracement. Take a look at a couple of them here. Look at Nordstrom's, JWN. Now, it's already down 7% off of this flag here, but you'll see this pattern a lot right now, Matt. There are some companies that people are willing to kind of dip their toes in on the buy side, but there's a lot of bear setups, like on high-end retail. Who's going to the mall right now? It's a really easy thesis here with some of these certain kinds of companies, Starbucks, Nordstrom's. Matt, sell the rip bear retracements. Are you willing to approach them as swing trades, or are you staying away from them? Are you thinking about potentially getting back into that kind of trading?
No, obviously there's going to be a risk carrying anything overnight, but some of these bearish retracements we saw in our scouting report meeting over the weekend, and definitely check out Tim's fantastic stock report, Tyler's awesome option report. But yeah, the one thing I felt like all of us coaches at Tackle had a little bit of confidence, not like push the chips to the middle of confidence, but were these bear flags and these bear retracements that really kind of came into that falling 9 EMA. Mm-hmm. And I do believe that some of those can be swing traded, Jess.
Yeah, like look at Marriott right now.
Oh, it's like you read my mind. I love this setup.
I mean, it's a little early for me, but that back rally, I mean, we bottomed at 46. We snapped all the way back to 73, hit the 9 EMA. You might have to prep this on the intraday, guys. The hourly chart's going to be cleaner.
All of these stop losses entries would have to be prepped on intraday time frames because of the volatility. Yep. But you can prep it as from an intraday perspective, and then turn it into a swing trade as it starts building its momentum back back to the downside. But you got a pretty decent trigger right there under $70 on Marriott.
Yeah, for sure. One last one for me. Amazon, Jeff Bezos says they are increasing their warehouse workers' minimum wage by a couple bucks. And so did Walmart, by the way. Amazon also pledged to hire 100,000 new employees to meet the growing demand for these online shipments and sales and all that kind of stuff. Matt, there'll be winners and losers in any kind of economic storyline. There's no question about it. I don't know exactly what we're going to be talking about next week because the market is moving hour by hour by hour by hour. But we're going to keep finding the good stories and the bad stories and just trying to understand it from a data perspective and keep the emotions out, right?
Got to be data driven.
Got to be data driven. Matty, last thoughts here from you, young man. Monday morning, markets are moving. Anything?
No, I'm going to approach this week the same way I've approached the last 3 weeks. Going to get up, do our routines. Going to, put great content out there. Going to, focus still on intraday timeframes and, maybe some short-term swing trades in some of those bearish setups that you identified in the stock and the options report. We got a great schedule this week at Tackle where, get into the Traders Lounge, get your questions answered every day in the Traders Lounges. Obviously, we're going to be here every day to break down the halftime report. We got the podcast coming out later on tonight, as well as, tomorrow night during the coaches shows, guys. Coach Keith King is going to be doing an hour to an hour and a half webinar in our coaches show on using the futures market as a way to hedge. And for those of you that have been attending the coaches show, would you agree that the last 2 weeks has helped understand the futures market, day trading in the futures market? And the futures market is going to see a tremendous more popularity, in my opinion. And so we're going to spend our time this week getting people ready for that.
Yeah, no question about it. And pretty simple thing that we always do, guys. If you want to see what our pro community is all about, there's a link underneath that you can try it out for 15 days on us. Come and see what we're doing in those shows.
And let me just ask one question, Tim. How many in our community would need one-on-one help from the Tackle coaches? Because we're looking at launching a coaching program for our community to work one-on-one with some of the coaches on a weekly basis. So get excited for that as well, guys.
Mm-hmm. Yeah, for sure. Great job. By the way, the market is trying to V-shape a little bit here on the intraday. Nothing in the short term, though, would be too much of a confidence builder just on the intraday chart when you're still below everything. But nice little rally on a 5-minute chart. There's no question about it. Little bit of a pop off that bottom. We'll see how it closes. And then we'll come back tomorrow and break it all down in the halftime show. Guys, like and share, comment below, subscribe, and click the bell if you've never been here before. We will see you tomorrow. We're out.